here with the Traders Club. Welcome to the market update, and I hope you guys are having a great week, great Friday, and looking forward to the weekend. Hope you guys not get too discouraged by today's action. And so I'm here to give you guys a long-term trend perspective, right? And this is something that I've been harping on last couple weeks and months, and this is something that I've harped on in 2016, early 2016. This NASDAQ chart that you're seeing right here, this is chart from 2016, early 2016. What I've said, also there are many videos I've done in early 2016 talking about why the market crash is not going to happen. Something that I talked over and over again when in early 2016 was this: trend is assumed to be in effect until it gives us a clear signal that it has been reversed. This is something I've been saying, I don't know, pretty much all throughout this year, right? But when the market starts shaking and baking and all these short-term traders, right, they're just always freaking out. There's always somebody somewhere from, I don't know, Morgan Stanley, from somebody from Zero Hedge, or somebody from Bloomberg somewhere that the crash is going to happen. Trust me, it was worse in 2016. And some of you might say, well, you're just making things up. Maybe you are scared. Maybe you thought the crash was going to happen. Well, here's for those skeptical people. Here, January 30th, 2016, bulls one last fight for a reversal. Actually, also, if you actually go to some of my YouTube videos, you'll find some of the headings that, I talked about how in early 2016, why I believe that the market wasn't going to crash, but oh, here, just so you know, too skeptical about because I'm trying to make a point with it. Bear with me. I'm going somewhere with this 2016 thing. So 2 years ago, that was 2016. This is early 2016. 5 reasons why stock market crashed enough. Stock market 5-year bull run is coming. 2 years ago, again, Dow historical breakout, new secular bull market ahead, and there are other bears, coming extinction of the bears, no market crash. That was also 2 years ago, and you saw what happened in 2017. Stock market crash not explained in one chart. Why the stocks will bounce, bullish divergence analysis 2 years ago. Stock market, so all these analysis, if you go to my YouTube channel, 2K Kim, see this tab here, that's all from 2 years ago. But also the chart that I just shared with you right here, this chart is from the article or the blog post that I wrote back in January 30th, 2016. Bulls one last fight for a reversal, basically saying this was the level of a major support. So you can go and, this link is, if you're gonna go back, you can just probably Google this title and you can probably get here. So you can see, but that one chart is from here. You see that? That's where that comes from. So that's not something I've manufactured to, lure you in or, make my point. But so I was bullish in early 2016. I had the best year in 2017 in my trading career because I was bullish in 2016, and I was full on bullish in 2016. I'm still full on bullish this year. I've been buying the dips this year. So when you look at this chart, because I'm trying to prove a point here, your human psychology and how your emotion and fear and all that works. When you look at this and say, when I give you this chart, because I've given this chart in my video, I think 5 reasons why stock market crashed not in early 2016, and many people on YouTube in their comments, because all these losers on YouTube, right? These people who write stupid comments, because they'll never say anything in my face, but they're so brave, go on their computer and then they'll say stupid things, right? So they'll say something like, okay, this time is gonna be different. That's something that you always hear, right? This time is different. I made fun of that in like a couple videos ago. And do you live your life telling yourself that this time is different? I'm gonna get in a car accident, right? Nobody lives like that, but traders live like that. This time is different, right? So they say, well, okay, this time is different because of this, and this reason. There's this geopolitical reasons. There's this interest rate reasons. There's this China reasons, Russia reasons, Greece reasons, all these different reasons why this time is different, than, when I talked about this here. So when you look at this is 2016, and let's just tell yourself, what would you think to yourself if this is today? There's a lot of fear, obviously. I mean, look at this. NASDAQ came all the way down, or all the way up to prior resistance, and you know what happened in 2000. Oh my goodness, the tech crash, right? I mean, the bubble has bursted, right? I mean, this thing just crashed and went to nothing, right? So we're just right at that level. I mean, not only technically it was a very vulnerable level and vulnerable area, but fundamentally, I mean, global market meltdown, that's what I'll say 90, maybe even 95 market participants, right? Mostly retail traders and investors were scared. They were scared and they were just shaking off their boots, right? That's 2016. And I simply proposed this idea. Right? Obviously, I have other reasons, but this is one simple reason. Trend is assumed to be in effect until it gives us a clear signal that it has been reversed. Do we have a clear signal that it has been reversed? And you say, well, okay, it could. This looks very weak. This looks very toppy, okay? Look at all these things going on geopolitically. Look at all these things going on, worldwide. I mean, this is a very, very vulnerable stage in the market. Could be some crash coming. Again, I want to propose to you very simple idea. Trend is assumed to be in effect until it gives us a clear signal that it has been reversed. The market is going to shake and bake. That's given, right? And you know what happened in 2016 and 2017. In 2017, we've seen a bull run, right? That we have bull buying pressure. I talked about this on my video, 2018 stock market crash special report. I talked about it. A bull market, right? A buying pressure that we haven't seen in 30 years. Buying pressure we haven't seen in 30 years. That's what happened in 2017. And I was full on bullish, and I had the best year in 2017 in my trading career because of simple idea, right? Well, ladies and gentlemen, this is today. This is today. So I must have screened this a couple days ago or something like that. So I mean, we're still around this area, and this is a weekly chart of the Qs. So you can see, and you know what happened in 2017, right? 2016, 2017. So this chart right here, this is a weekly as well. This is NASDAQ. That's right there, right? This is a NASDAQ of weekly, and this is a Qs. So that was right here, right? Right here, right? Right here. That's what that chart was, right here. Yeah, so right there. So two lows here. We got the low there. I got the low here. So that's where that was. That low. And then this low, 2016, right? That's what that was. And then look what happened, right? So today, trend is assumed to be in effect until it gives us a clear signal that it has been reversed. And I know some of you are going to say, this time's different because of this. China tariff, the trade war, the interest rate, some people are going to say yield curve and whatever, right? The Trump, he's getting in trouble. All these things going to say that again. And that is not really them talking because they're concerned about these things. They're truly concerned about economy. What they're talking is they're talking because they're fearful, because they're scared. They're scared they're going to lose their money, right? And only usually amateur traders say this, because you don't hear Warren Buffett saying something like this. You don't hear Ken Fisher saying something like this, right? You might tell me, well, Ray Dalio, okay, has been saying the Black Monday is going to happen here. I do respect Ray Dalio, but I do not respect on his call, because Ray Dalio has been calling for Black Monday since 2015. Go look it up, do a little research. He's been saying that since 2015. NASDAQ rose about 40% since. So does that make sense that, you know what I mean? No, not 40%. No, hell, not 40%. S&P rose 60%. NASDAQ rose from 70. That's, what's the percentage there? I don't know, maybe 80%. Maybe more than, you know, maybe 90, 100% from here. How does that work? I don't really know how that, so it was like what, 80, and then it went to like 180. So does it make sense somebody to wait? Because I mean, the Black Monday, it was 40% decline, right, in a month or so. So it's very, very fast decline. So he's looking for 40% decline when S&P did 60% from the 2016 lows to the highs. When NASDAQ probably did, I don't know, is it 100%? Does that make sense? No. So basically, since he's been calling it since 2015, he not only missed out on this entire move, he might have even lost money for shorting it. But who knows what he's really doing behind the scene? Who knows? He will say one thing in public and doing something that, who knows? These guys are billionaires. You know what I mean? What would you do? I'm not saying that he's a bad person. I'm not saying that that's what he's doing. I have no proof of that. I'm just saying, I'm not going to just take his word for it. And he's been saying that since 2015. So he's been dead wrong on that. But anyway, so we're here. We actually broke out of this now. This 20-year consolidation, you can call it. And now we're here. People who calling bearish here is same people calling bearish here. People want this thing to crash because they didn't participate in this move. And it is human psychology to hate on people who did make money on it. So then, obviously, if they were bearish here, they will not make any money in this bullish run. So now, once you go major bearish, like you're calling for major crash, it is very, very difficult for them to go back bullish, because once you flip major bearish, you know, and you thought the crash was going to happen in 2016, then in 2018 and 2019, well, now the crash is way, way overdue. Is now there's going to be a worse crash. And I remember, you guys, I've done... You guys remember I've done let's see, the video, this video, Marc Faber, stock market crash lunatic, right? Here, let me show you something real quick. So, exposing Marc Faber, the stock market crash lunatic. So this is this guy. 2011, the bear market. 2012, massive market meltdown. 2013, 1987 crash coming. 2014, worse than 1987. 2015, great danger. 2016, 40% drop. So Marc Faber and Ray Dalio, they're all saying the same thing, Black Monday, 40% drop. 2016, again, investors are on Titanic. 2016, ugly stock market crash. So 2016, he came on and talking about how there's going to be huge, huge crashes coming. This is 2016. And this was 2017. Do you really want to believe these guys? Just because they're popular just because they got a lot of followers? Do you even know what they're really doing? I mean, we don't know. You know, you can't go watch this video Googling or, you know, YouTube searching, exposing Marc Faber, the stock market crash lunatic. Lunatic. Yes, I called him a lunatic because he is a lunatic. That's he was saying here, crash coming, crash coming, crash coming, crash coming, crash coming, crash coming, and then 40% drop. Titanic. It's gonna be worse than ever. And you guys still want to believe these guys. You guys still want to watch CNBC. You guys still want to watch Bloomberg. You guys still want to quote these people. I don't understand. Do you really want to get bullied around like that? You gotta be smart about it. This is why you guys are listening to me. And I always get great feedbacks from my followers. They said they don't listen to anybody else but me. I'm grateful for that. You know, what I present is what I see and the long-term trend implication and validation expectation. You know what I mean? And as you know that I don't act emotionally, because that's what it's going to take. If you're going to want to participate in a move like this, you're gonna have to go against the majority. Socrates says, if you want to be wrong, then follow the masses. And we all know the market always follows the majority. We all know this stuff. Yet when the market starts shaking and baking, you cower it out. And every day you're fearful. You cannot live yourself like that. Otherwise, just get out of the market. You're not made for this. If your stomach is churning, you can't sleep at night. You're depressed as hell every single day because of you lost a couple thousand. You're not made for it, man. I'm telling you. Because people with money, they're not just losing a couple thousand. I mean, Warren Buffett is probably, it's a paper loss, obviously, because it's not, you know, he's not closing any of those positions out right now. He's down billions. Do you think he's flinching right now? It's only these small time traders and investors with their small money. They're always just, you know, and I'm not putting down those small traders and small investors because I started that way. But it's time to grow. It's time to build yourself up and not let these people on TV, do you really think they care about your investment? Do you think CNBC and Zero Hedge and all these different people? No, they just want your publicity. And this is the same thing I said in 2016. Go check out my videos, what I said. I'll end the video. I got a few more slides here, but this is weekly. I actually did this, you know, maybe a couple weeks ago, but I checked it today, still there. It's still valid. Would you buy it here? Would you buy it here? Would you buy it there? Would you buy it here? Would you buy it here? One last one. I think this is the most important. This is the one that I screened today. Right here. This is I screened today. So just, you know, an intraday. So you can see this indicator right here. Or right here. This is what you call bullish divergence. This is a bullish divergence. And so the arrows points out to when there's a bullish divergence every single time. And this right here, you can see extreme oversold. Extreme oversold where? 2009, I mean, we had a crash, so obviously extreme oversold. 2011, extreme oversold. Look at that. It came all the way down. And then 2015, late 2015, extreme oversold. We hit that right here. And then we hit it just now, late 2018. Is trend valid as of today? Yeah. Trend is assumed to be in effect until it gives us a clear signal. And I'm talking about major primary term uptrend. Like I said, I'm a long-term investor. Long-term investor and a position trader. I hold things much, much longer than majority. You go out there and you talk to you see these guys' videos, man. All they're talking about is Above here, bullish. Below here, bearish. They have no idea what's going on long term. They're always talking about same crap. Like, yeah, be nimble. I've been scalping. Stupid people, really. I believe only way to truly accumulate wealth in the market is to be long term. You don't hear day traders making wealth. They can make money here and there with big pops here and there, just like any gamblers can. But any traders and investors out there who truly made money and wealth are the ones that were long term, ones that understood the long term, ones that invested in the market long term and grew their account over time. You want to gamble? Go ahead and do gambling style. You guys have a wonderful weekend, and good luck trading next week.